Hello and welcome to BYJU'S IAS. Let's get started with the analysis of today's The Hindu newspaper, beginning with a news item on page number 1 of the Delhi edition of The Hindu, relevant for GS paper 2. But before we start, I have a request. If you're liking our initiatives, daily The Hindu newspaper analysis, weekly economy this week, weekly IR this week, please let us know. Like this video, comment on these videos. That is one way of letting us know that we are of some help to you. And if we have been of some help to you, let us know. Like this video, subscribe to our channel if you haven't, and let's look at this newspaper article. The tensions between India and China on the line of actual control has gravely impacted the Chinese businesses in India. In June this year, 59 Chinese apps were banned, such as PUBG, TikTok, etc. Then more apps were banned, and now 43 apps have been banned. What we need to understand from this newspaper is Section 69A of the Information Technology Act 2000. Under this section, if the Government of India feels that it is in the interests of the security and integrity of India, the defense of India, the security of India, then what the central government can do, it can block sites, apps, it can also block the websites. So basically, under Section 69 capital A of IT Act of the year 2000, if the Government of India feels that there are some apps, some sites, some websites who are engaged in activities which are against the sovereignty and integrity of India, against the defense of India, against the security of India, then the government can block these sites, apps, and websites. What we also need to understand that for the past few days, Shreya's single judgment is in the news, because it was in Shreya's single judgment of 2015 that Supreme Court struck down Section 66A of Information Technology Act. But it was in the same Shreya single judgment that the Supreme Court upheld the validity of Section 69 capital A. One more thing which can be relevant for your prelims examination, there was a department called Department of Electronics. In the year 1999, this Department of Electronics was renamed as Ministry of Information and Technology, or Ministry of IT. Then what happened? Two departments, Department of Telecom, Department of Posts, they were merged with the Ministry of Information and Technology. And then in the year 2001, this Ministry of IT became Department of Information and Technology. However, there was a growing feeling that electronics department has not been given adequate importance by the government. What happened? The year was 2012. This Department of Information and Technology was renamed as Department of Electronics and Information Technology, DT. Then what happened? In the year 2016, this Department of Electronics and Information Technology, it was made into a full-fledged ministry, and this full-fledged ministry has now been rechristened as Ministry of Electronics and Information Technology. And this order of banning these 43 more sites has been issued by this Ministry of Electronics and Information Technology. These facts are important and can be relevant for your prelims examination. That is what we need to understand from this newspaper article. Now let's look at another newspaper article. Poshan Abhiyaan needs a boost, says a study, a report conducted by Niti Aayog. If you look at Poshan, Prime Minister's overarching scheme for holistic nutrition, or Poshan Abhiyaan, or it is also known as National Nutrition Mission. This is basically a flagship scheme of the Government of India. What is the objective? What is the purpose? The purpose is to improve the nutritional outcomes. For whom? For children, for pregnant women, and lactating mothers. So primarily the objective of this flagship scheme of the Government of India is to improve the nutritional standards, outcomes for children, pregnant women, and lactating mothers. This program was launched in the year 2018. Niti Aayog has played a very important role in shaping this Poshan Abhiyaan. How? The year was 2017. A strategy was released by Niti Aayog. And this strategy of Niti Aayog, it presented and provided an analysis basically of the problems of malnutrition and how can we overcome these problems of malnutrition. That strategy was presented and provided by Niti Aayog in the year 2017. And all these recommendations of Niti Aayog, which were made in the year 2017, these recommendations were included in this Poshan Abhiyaan. And when this Abhiyaan was launched, Niti Aayog was entrusted with the responsibility that now it is your task of monitoring the progress of Poshan Abhiyaan. A very important statement for your examination. Under this Poshan Abhiyaan, Niti Aayog is required to submit status reports, and that too after every 6 months. To whom? To the Prime Minister's office, which means Prime Minister's office is personally monitoring the progress of this program. That means important statement for your exam is, under this Poshan Abhiyaan, Niti Aayog is required to submit status reports, that too every 6 months, of the progress made in Poshan Abhiyaan. To whom? To the Prime Minister's office. And the month of September is normally celebrated as Poshan Mah, or what we call Nutrition Month. What is the aim of this Poshan Abhiyaan? The aim is to reduce stunting, overweight, low birth weight by how much? By 2% every year till the year 2022. So one objective, one of the main aims of this program is to reduce stunting, overweight, low birth weight 2% every year till the year 2022. There is another objective, and the objective is that anemia among young children, adolescents and women be reduced by 3% every year till the year 2022. These facts are very important for your prelims examination. And to meet these targets, what Niti Aayog is saying, that we need accelerated actions on multiple fronts to meet these targets. So what is Poshan Abhiyaan? What is the background? What is the objective? That is what you need to understand from this newspaper article. Now let's look at some of the editorials and columns from today's newspaper. The first one, the dangerous suggestion, and the second one, say no to corporate houses in Indian banking. There is a report by RBI's Internal Working Group. This Internal Working Group was headed by Mr. P.K. Mohanty. This report has drawn a lot of attention as well as criticism. But first up, why was this group, Internal Working Group, constituted? The task for this group was, please review the ownership guidelines of private sector banks. Please look at these private sector banks and look at their corporate structure as well. This group has submitted several recommendations. One recommendation that has caught everyone's attention is this. This group headed by Mr. P.K. Mohanty has recommended that let's allow large corporates or large corporations to do what? To be promoters of the private banks. This recommendation has been criticized by many, most notably by the former RBI Governor Dr. Raghuram Rajan, as well as by former Deputy Governor of RBI, Mr. Viral Acharya. And both Raghuram Rajan and Viral Acharya published a joint report on LinkedIn, wherein they were highly critical of this report by Internal Working Group of the Reserve Bank of India. But let's look at this issue in slight detail and understand what is the controversy. We have had a history of private banks in India. India's banking system has changed a lot since independence. At the time of the independence and for several decades after that, many banks were owned by the private sector. And this also led to few problems. Problem number one was concentration of wealth in fewer individuals, which is also a violation of directive principles of state policy. So one problem was concentration of wealth in the hands of few business families. Problem number one specifically was that poor were mostly denied credit by these private banks. Second problem was that priority sectors that we have, for example, education, agriculture, they were being neglected by these private banks. One big allegation was that these private banks were catering to the interests of the select few, while as the poor, marginalized, they were kept out of the lending system, they were kept out of the credit system. Then what happened? The government of India nationalized these banks, converted these private banks into government-owned banks. The year was 1969. Indira Gandhi was the Prime Minister. 14 banks were nationalized by the government of India. The year was 1980. 6 private banks were nationalized by the government of India. But then came the reforms of 1991. The economic reforms, liberalization, privatization, globalization. Economy needed more and more money. Economy needed more and more credit to fuel the growth in India. And then private banks, they re-entered the picture. And this had a huge impact on economy. And basically the impact was a positive one. More and more private banks, they started operating in India. The competition also increased. More and more credit was made available. Financial inclusion also got strengthened in India. More and more banks, they started operating in rural areas. ATM facilities got increased. That means the entry of these private banks post 1991 reforms, it has largely had a huge, good, positive impact on the economy. The year was 1993, and the Reserve Bank of India, what it did, it allowed private banks in India again. And what happened? 10 private bank licenses were given. The year was 1993. Fast forward 2001, fresh applications were issued by the Reserve Bank of India, and 2 banks started. One, which is in controversy right now, the Yes Bank, and the other, which is also in controversy, Kotak Mahindra. Kotak Mahindra has also dragged Reserve Bank of India to court, although now they have settled the matter outside the court, but that's not the point of our discussion right now. My point is simple. When banks were nationalized in the 1969 and 1980, then with the advent of liberalization, privatization, globalization, private banks, they re-entered the picture. The year was 1993. 10 private banks started operating in India. The year again was 2001, and 2 new private banks, they started operations. Then again in 2013, fresh applications were issued again. Many applied in this case, including Anil Ambani. He also applied for a private bank license. And ultimately, 2 new banks emerged. One, the Bandhan Bank, and the other, IDFC. But let me caution you here. It's not very easy to get a bank license in India. Reserve Bank of India is very, very conservative in issuing these bank licenses. And there are strict guidelines, strict conditions imposed by the regulator, which is the Reserve Bank of India. Because let's not forget, banking system is all about trust. You deposit money in a bank because you trust the regulator, which is the Reserve Bank of India. Otherwise, let's say, for example, you deposited your money in a bank. What if tomorrow this bank collapsed? What if this bank is unable to repay you your deposit? You have only an insurance cover of 5 lakh rupees. This insurance cover was only 1 lakh rupees till this year's budget. It was only in this year's budget that the Honorable Finance Minister, Mrs. Nirmala Sitharaman, enhanced the insurance cover to 5 lakh rupees. So basically my whole contention is that banking sector is all about trust. And who plays a very important role to ensure that people trust the banking system? That's the regulator, Reserve Bank of India. And that is why strict conditions are imposed by RBI for these private banks. What are these conditions for setting up of private banks in India? Number 1, if you want to apply for a bank license, if you are an applicant, you should be fit and proper. This is one condition. But what do we mean by fit and proper? Which means for 10 years, this applicant must have run a successful business. That means 10 years of successful work experience. Then you are eligible. Then you are fit and proper to apply for a private bank license. But this applicant, this private entity, it can promote a bank. Please understand one thing. There is a difference between owning a bank and promoting a bank. This applicant, this private entity can promote a bank. And how can this private entity promote a private bank? Through NOFHC, non-operative financial holding company. Requirement says, RBI says that 50% of these directors in this bank, they should be independent. RBI condition says if you are an applicant and if you are promoting a private bank through this non-operative financial holding company, which means initially you will have 100% stake in this bank. But what you have to do, within 3 years, your stake must be reduced to 40%. Then within 10 years, your stake will be reduced to 20%. Then within 15 years, your stake will be reduced to 15%. This shareholding pattern is basically the point of dispute between Kotak Mahindra and the Reserve Bank of India. But let's not get into that. We are digressing from the main issue. The main issue here is that private players can enter the banking sector, but it is very difficult for them to get the licenses. Why? Because there are strict conditions imposed by RBI. Condition number 1 is if you are an applicant, you have to be fit and proper to apply for a private bank license. What is that fit and proper? What is this criteria of fit and proper? Basically 10 years of successful work experience. You have to promote through non-operative financial holding company, but over a period of time you will have to reduce your stake in this bank, and there are various other strict guidelines also, but let's not get into that. Long story short, this means private banks are allowed, but large corporate houses are not allowed. And which are these large corporate houses? Basically a group, and this group, if this group has total assets of more than 5,000 crores, then this group is a large corporate house. This group cannot apply for a private bank license in India. And now this internal working group of the Reserve Bank of India, what it has recommended, that allow these large corporate houses also to set up private banks. And RBI will regulate these banks. This is where the controversy is all about. Some are in favor, some are against. Those who are in favor, they say, what's the harm? Large corporate houses can be important sources of capital, which is what is needed right now. So let's allow these large corporate houses to set up private banks, to promote private banks, because that is how we can get capital, we can get money. And this money we can use to fund various investment programs, various infrastructural programs. Second argument is they're saying that these big corporate houses, they're running their businesses successfully. And if they are in a position to run their businesses successfully, they will run banks as well successfully, which basically means these large big corporate houses, they will bring with them their own management experience, the management expertise. And ultimately what will happen? Competition will increase. Competition within the banking system will also increase, which basically mean if you will go to a State Bank of India branch and it is lunchtime, tomorrow maybe they will start entertaining your requests. So that means competition in the market, in the banking system will enhance, increase. But others are saying that don't allow these big corporate houses to enter the banking system. And the biggest problem that they are raising, biggest issue that they are raising is that of connected lending. What do we mean by connected lending? Just for the sake of explanation, let's say for example, we have Mr. Ambani. Mr. Ambani heads the Reliance Industries. Reliance Industries is in telecom, is in oil and petroleum. Reliance is there in education sector as well, for example. And now if Reliance is allowed to have a bank, to promote a bank, then what will happen? You and me, we will start depositing money in this bank. But I told you banking sector is all about trust. Reliance Jio needs money, needs capital. For that, Jio had to approach a bank. But this bank will look at how Jio can repay this amount. That means this bank will take an independent decision whether loan should be provided to Reliance Jio or not, whether Reliance Jio has the capability and capacity to repay this amount. Otherwise, it will turn into non-performing assets. But if Reliance already has a bank, that means this bank has deposits of people like you and me. And what will happen? This bank, which is promoted by Reliance, what it will do, it will indulge in connected lending, and ultimately these deposits will be used to lend money to other businesses of this promoter individual or promoter entity. That's problem number one, connected lending. Now what happens? Let's say, for example, one of the business entities of Reliance is under shock. Maybe petroleum, crude oil prices, they fell drastically in the global market, and ultimately there is an impact on Reliance Industries as well. Let's say, for example, Reliance and Saudi Aramco, they almost had a deal that they will collaborate with each other. But ultimately, let's say this deal fell through. This deal could not be materialized. This will have an impact on Reliance Industries. But if one industry or one entity is affected, will it not affect the bank which is being promoted by this entity? So basically it means if the non-banking entities of this promoter, if non-bank entities are in trouble, then this bank is also in trouble. And when the bank is in trouble, what will happen to the depositors? These depositors are to be rescued. And who will rescue them? The government. So additional burden on the government. This report of Internal Working Group of RBI, according to Dr. Raghuram Rajan, he says that it will lead to big businesses who are politically connected as well. It will lead to these big businesses dominate this affair. And ultimately RBI will find it very, very difficult to regulate this sector effectively. There are other critics who go a step further. They say what happened in 1969, what happened in 1980? Nationalization of banks. Private banks were converted into government banks. Now, because of this P.K. Mohanty report, what you're trying to do, you are trying to now privatize. So State Bank of India, all these public banks that we have who are in crisis right now, what will happen? These big industrial houses, they will set up private banks, and then these private banks will bail out these state banks, and ultimately private banks will control the government banks. So it will be basically the reverse of 1969. 1969 nationalization took place, and now in 2030 privatization can take place when these private banks, they will swallow the government banks. That's what Mr. T.T. Ram Mohan mentions. There is another aspect to this proposal that cannot be ignored. Corporate houses are unlikely to be enthused merely by the idea of growing a bank on their own. The real attraction will be the possibility of acquiring public sector banks whose valuations have been battered in the recent years. And this is going to affect financial stability as well. That is what you need to understand from this column and this editorial. Now let's look at the practice questions, first for prelims and then for mains. Which of the following is not a function of the Reserve Bank of India? It deals with regulation of liquidity. It deals with regulation of foreign exchange. It is the banker to the center and the states, but it is not managing the fiscal deficit. That's the responsibility of the central government and the respective state governments. So C is the right answer. Question number 2, consider the following pollutants: carbon dioxide, monoxide, nitrous oxide, hydrocarbons. Which of the above are present in vehicular emissions? D. All of them are present in vehicular emissions. The major pollutants from motor vehicles are: number 1, particulate matter, volatile organic compounds, nitrogen oxides, carbon monoxide, sulfur dioxide, hydrocarbons, carbon dioxide, so on and so forth. Let's look at question number 3. Which of the following are responsible for acid rains? Volcanic eruptions? Yes. Thermal power plants? Yes. Burning of coal? Yes. Automobile exhaust? Yes. D is the correct answer. So basically the sulfur dioxide gas, which is emitted because of these volcanic eruptions, what happens? They react with the oxygen and the moisture which is present in the atmosphere, and that is what leads to acid rains. Similarly, thermal power plants, burning of coal, automobile exhaust, What they do, they produce oxides of nitrogen, sulfur, and carbon, and that also leads to acid rains. Question number 4, here is a scheme, here is the objective. So which of the above pairs are correctly matched? Uday scheme is for financial turnaround for discoms, electricity distribution companies, correct? PM Sobhagya is basically access to household electricity. Ujala scheme is basically to provide LEDs. Ujala is basically Unnat Jyoti by affordable LEDs for all. Access to LPG connections, for that there is another scheme called Ujwala. So which of the above pairs are correctly matched? A, one only. Prelims 2020, along with budget, the finance minister also places other documents before the parliament, which include the macroeconomic framework statement. This document is presented because this is mandated by the provisions of Fiscal Responsibility and Budget Management Act 2003. And it is this FRBM Act which is used to control and manage fiscal deficit. Mains based questions. Number 1, the monetary policy framework adopted by India and many other countries is correctly described as flexible inflation targeting. Discuss. Question number 2, the biggest concern of allowing corporates into banking industry is that it will lead to the concentration of economic power in few hand-picked industrial houses. Critically analyze. That is it from our newspaper analysis for today. Thank you for being with us. Have a great day.